Welcome to another edition of our Sense of Identity podcast. As those of you who may have seen some of this before, this podcast isn't really about us. It's about speaking to interesting people inside and outside of our core industries to get a flavour of what they're up to, really. Adam and I are delighted to welcome Mark McAlpine and Kerry Nicolaides. So thanks very much for joining us today.
Thanks for having us. Glad you say we're interesting.
No, listen, thanks so much. I mean, these roles are a bit strange, because we've all known each other for a while in different guises and backgrounds and things. But when we started chatting before, the thing for me that was interesting is that you guys have joined forces and not a new business, but a new approach to some quite interesting topics. Perhaps initially we could start by getting a bit of background, because I know from your side, Kerry, obviously we've known you for a long time, but, a wealth tech background. When I started looking a bit more into Mark's side of things, and again, we've been out with Mark and Mark for a while too. You've done some really interesting stuff with businesses and other sectors, which are including some quantum computing technology and God knows what else. So maybe a good place to start would be if you can give us a little bit of background individually, and then we'll lead into some other subjects.
Yeah, sure. Kerry, do you want to go first?
Okay, I can do. So, I mean, proposition is my thing. I've done propositions for 20 plus years here in the UK, all in financial services, but recently, maybe even some in the utility sector. Propositions I'm focusing on at the moment are really, how do we build inclusive services that leave no one else and no one behind? So I think we'll leave it at that, Mark, and then we'll go into a lot more about it. But propositions, inclusive propositions.
And that's a good place to leave it hanging slightly for reasons I'll explain in a minute.
Yeah, so I've been around financial services for about 25 years, give or take. I started not the odd one out at the tail end of last year. I was fed up with strategy kind of staying on the slide deck, if you like. So, not being delivered in real life. So effectively, we're a strategy and delivery firm. We work with organisations doing meaningful financial inclusion work. So that's people like credit unions, building societies, mutuals in general, and small banks. So for anybody unfamiliar, credit unions are not-for-profit financial cooperatives. They're owned by their members and they exist to serve their communities. And they offer the same kind of mainstream financial products that you would get from your bank or your building society, but predominantly it's savings loans, and they support people who might be underserved or overlooked by those mainstream banks. They're absolutely values-driven and locally rooted, but they're often under pressure to modernise. And that's kind of where I come in. So we started not the odd one out at the tail end of last year. We wanted to bridge the gap between big ideas, because there's a lot of creative people in the credit union sector, and then moving from those big ideas into actually making them real within the kind of loose kind of technology frameworks, I guess, that we've got at the moment. So we're not your typical consultancy, and we're a little bit different.
Yesterday we sat down, didn't we, and we were saying, I don't understand enough about those different touch points in the industry. And actually, I think that's a really interesting place to start. But just to sort of set a theme, one of the things we've always been very conscious of is trying to level the playing field, because we deal with everyone from, consumers to micro businesses, tiny businesses, large enterprises. And when you guys started chatting about, well, actually, there's this whole really important part of the financial services sector that similarly needs to sort of level that playing field, needs help to ensure that that it can leverage some of the fantastic values that are around it. That really resonated for me. But I don't know, we started making some notes, because, as I say, credit unions, these things are not something that everyone's as familiar with as they should be, are they?
The sad reality is the market share for credit union membership in the UK, the overall share of the financial services sector is less than 3%, right? And yet you have these values-driven local organisations that are there just to help their communities, that are owned by their members, that do really great things. And there was a time when the playing field probably was level. You go back to the 1960s when they first made an appearance in the UK, the 1970s, before the kind of technology revolution, where the playing field was level. And then, people with deeper pockets could buy newer technology and begin to offer more.
Yeah.
But we're at a real turning point at the moment, because technology and transformation is much more readily accessible to organisations with smaller budgets now than what it was even like 2, 3, 4, 5 years ago.
So with that challenge then, Mark, are you able to try and pull together maybe some potential customers with the same sort of challenges and try and address them jointly. So more of a, almost a cooperative approach towards change.
Yeah, we've done exactly that. So there are 3 really forward-thinking credit unions up in Scotland who've effectively formed their own cooperative. So a cooperative for cooperatives. They've realised that as organisations that are broadly similar, that if they pool their resources, if they aggregate their buying power, they can have a much bigger impact on their members' lives. So we've been working to establish something called CU Share, which is the first cooperative shared services organisation for credit unions in the UK.
Yeah, and there's something really nice about that. I mean, forget. I mean, obviously everything has to be commercial, but when we look back on the history of this, actually, credit unions go back to the 16th. Friendly societies back to the 1600s, I think. Some of the mutuals again, and a lot of us, the touch points that a lot of people who may listen to this will have with mutuals, and it has been sort of windfall shares and demutualisation. Because if you remember, I certainly remember back in the day when it really resonated that the mutuals focused on their membership and they were there for their members' benefit and all those things. Those values resonate for me, and I still think they resonate for any human being, actually. And yet there was a period, wasn't there, when, and a few resisted it. Some of the big ones still, like the Royal Londons and the Nationwides of the world, have maintained that mutuality. But there was this whole rush to try and get money into building societies who may suddenly demutualise and get a few shares and things. So so we've all been around in a period when things have changed a lot. But the idea of setting up a cooperative for cooperatives, it just resonates, doesn't it? It just makes so much sense.
Yeah, talking about the ethos, I only really discovered credit unions maybe 3 years ago, but they've fundamentally changed the way I think about the financial services sector and completely the way that I would build a proposition. And I'm not saying that other financial organizations don't look after customers in financial difficulty or those are vulnerable or those who don't have access to digital. But when you talk to a credit union, from the CEO right down to every single person in that organization, they literally live and breathe this ethos. It's palpable when you go into the organization. You feel how much they care about it, and it's just so much easier to introduce new solutions or propositions because everyone's got the same modus operandi, everyone's got the same ambition. It was so enlightening. It really changed the way it made us want to do better for that sector, didn't it, Mark?
You'll go to a conference with credit unions and building societies, and there's not any place else in the whole financial services sector that you will get so many well-intentioned, good people who just want to do the right thing in the same place at the same time, and that's what that's what it boils down to.
Yeah, and as you say, you've got to be careful because it's like I've no doubt that those values are reflected elsewhere, but when they've grown out of the need for people to support each other, that's a description that when I looked up. Because there's a huge amount of similarity between credit unions, friendly societies, mutuals, and when you look at the definitions, actually, it's very hard to sort of probably differentiate between those 3 types of organisations. But the one solid piece between all of them is they grew out of the need to support each other and people, and that's actually, as I say, that's not. I don't want to say it's unusual because I'm sure everyone's got those motives. But when that is the headline, this is what we do. That's quite. There's something warm about that, isn't there?
Yeah, and you look at building societies. It's 250 years since the first building society was formed in the West Midlands. So there's a big celebration in the Building Societies Association this year. And it's just people that want to help people.
And the worst thing is they want to do so much for their members or their customers, and they don't have access to the technology that need to do that. And there's for many reasons. I'm sure we'll go into those now, but that's the single biggest problem. They don't have access to the technology to enable them to build the solutions and services they want. They desperately want to, and that's the opportunity.
They've been underserved for a long time, right? But you can understand why. Like big tech firms, they want the 10, 15, 20, 30, 40, 50 million pound contract values. They don't necessarily want to do a piece of work that's 150 grand or less with a small credit union. But the opportunity now is where they start to look at how they aggregate their buying power. There's lots of SaaS solutions out there that they consume that's really cost effective. And we will get to the stage within the next 5 years where credit unions can offer the same digital experience that you would get from a Revolut or a Monzo, but instead it will be a local community bank, a credit union that's offering you that experience, that's reinvesting all of its profits back into its local community to help more people, and not distributing its dividends to corporate shareholders.
Yeah.
So that's the kind of world I want to live in.
Yeah, I think it's really interesting, and I guess back to how you position your propositions and generate propositions for that market. We've got experience in our field of looking at how we position what we do, and we've gone down the pathway of looking at things from an ecological perspective. We talk about customer engagement, and we talk about saving people money. And whilst there's always conversation about the environmental side and customer engagement piece, everyone really focuses on the money. Moving slightly away from that, I can see can lead to a lot more change for good rather than change for pound.
Yeah, it's just it almost feels like a bit of a Bank of Day ethos, doesn't it? Do you know what I mean? Those who've seen the film, I'm not sure how much of it is fiction or not either. But I think the whole idea about Bank of Day was setting up a community bank that then funded activity in the local community because it knew the people and all those things. It almost feels like that. Makes so much sense. So coming back to one of the questions out of my note, I'm assuming therefore, not the odd one out. Is that the reason for the name? Is therefore trying to help people make sure that they're not left hanging out there, and that you guys can help these companies start to access some of those tools by working as a collaborative cooperative, collective buying power, whatever it might be. Was that was where that came from? I'm guessing.
Absolutely right. There are about 1.5 million people who are completely unbanked in the UK. There's a huge percentage of people who are vulnerable. There's a huge percentage of people that can't access mainstream finance. There's a huge percentage of people that don't need to borrow, 2.5, 5, £7,500, but they might need to borrow 50 quid to buy a school uniform, But it's uneconomical for a mainstream bank to lend somebody 50, 100, 150 pounds for a school uniform. That's where credit unions come in. And just because it's a low value, it doesn't mean that person shouldn't have access that kind of funding. And it's those people that really need it that end up paying a premium for it, that end up going to a loan shark.
Yeah.
So we work on the basis that absolutely nobody should be left behind. Financial services should be fair, accessible, affordable, especially for those with fewer financial choices.
Yeah, and I guess this is also playing to the opposite end of the scale to what we saw as the payday loans and the legislation that came in to stop the abuse of that sort of stuff, didn't it? People, and again, I think Bank of Day was sort of reflecting on those same things. I mean, some of the history, I'd say it was fascinating actually, just to spend a bit of time to try and look into sort of mutuals and friendly societies. I mean, they date back, as I say, some of these to the 1600s. In fact, some of them at the very outset had their own secret handshakes and passwords and elaborate initiation ceremonies, a bit like, the secret societies. Bringing that up into the real world today, I mean, they provide really, valuable services and comparable, insurances and all those sorts of things. I don't want to use the word mainstream because they are mainstream, but in terms of comparing against some of those other brands that perhaps are more synonymous with some of those subjects.
Yeah, and we talk about kind of mainstream banks, and sort of mainstream access to financial products. Credit unions need to have access to the people that are of good financial standing, so that they put their savings into the credit union in order that the credit union can lend them. They have to be, fiscally prudent in decisions that they make, and have to make sure that they're regulated in exactly the same way as a bank or a building society. So they have to run their businesses really carefully, and the fact that they can manage the kind of mainstream book, the people that go to the credit union because they believe in the cooperative movement for a car loan, to also being able to do those 50, 100, 150, £500 loans to people that have an income shock or a sudden bit of expenditure they can't afford. Real balancing act.
And what, in terms of some of those technical issues, I mean, what are the sorts of things that you come up against for some of these businesses? I mean, I'm sure there must be lots of shared challenges, but what areas is it that not the one out is helping them focus on?
So the challenges broadly across financial services as a whole, whether you're a bank, a building society, or a credit union, challenges are broadly the same, right? It's legacy systems, it's a lack of automation, it's manual processes, poorly implemented and poorly adopted digital transformation programs. The credit unions suffer from the same thing. The difference is they don't have deep enough pockets to go and spend the money on a huge program of digital transformation in themselves. So we see challenges around straight through processing, so member acquisition at point of sale. We've got the basic challenges that only 3% of people in the UK have engagement with their local credit union. So the basic challenges are just getting the word out there and explaining what credit union is. But yeah, the main challenges I would say are digital, and then you've got some kind of regulatory challenges as well around, um, access to shared central liquidity. Credit unions don't necessarily have that in the same way that banks and building societies do. They can borrow to help with their liquidity, but they have to do it on a peer-to-peer basis, as opposed to a central reserve account at the Bank of England. And that might change within the next few years, or it might not. But there has to be some kind of solution for that in the short term to help the sector grow.
Yeah.
Yeah. Does changes in tech, don't want to overlabor AI, but it's the evolution of tech mean that some of that legacy can be improved without replacement,
Yeah.
so that the customer experience maybe isn't held back by those older systems?
Yeah. So and it becomes a bit of a problem as well. But yes is the short answer. So the advent of AI, the advent of things like microservices architectures will enable credit unions to build microservices around legacy technology. But that only goes so far. The legacy will still continue to get more and more expensive. Legacy tech is, especially if you look at things like the core, it's designed to hold information. You put stuff into it and it keeps it. It's not designed to share it. So the middleware that does all the kind of extraction of data and the calling to different services, it's got to be quite complex, and how it's built. So there will come a time where all that will need to change. But technology now, I think we're on a journey where that is slowly changing. It won't be long. Somebody will come along and say, right, this is how you get off all your legacy platforms. This is what Evergreen looks like. This is what modular looks like. And this is how you can be like Revolut.
The other bit appears to me, and again, tell me if I'm right or wrong, but I mean, these organisations are members of a pretty exclusive club, aren't they? Really, I mean, there's not. They don't seem to. Tell me if I'm wrong on this. They seem to behave in a slightly more collegiate way. I.e., it felt like it's been waiting to happen that someone would help them try and join the dots on some of this stuff. Because when you talk to one friendly society or another, which we've all done over the years, there's a much more collaborative feel about how they're willing to work together, which again, maybe just ingrained in the people that need to be in those sorts of businesses. Is that something you're finding on your travels?
So since I launched, I've been involved with the sector for a few years, not a huge length of time. I'm a non-executive director of a credit union in Edinburgh. You could walk into any credit union in the UK and be welcomed with open arms. They'd love to hear about what's going on in other organisations. And we've got groups of credit unions that band together across the country. So you've got the 3 credit unions up in Scotland who form CU Share. You've got 9 credit unions in Manchester that form the £1 Consortium, and they started to do season ticket loans for the public transport across Manchester, £1. And that's a fantastic initiative sponsored by Andy Burnham. So yeah, they're really good at working together, and they're really keen to do things together. Yeah.
They're very good at working together on big things. But I will also say they're also very, very competitive. And I think that's maybe where some of the conversations I have. So some of the bigger technology challenges they'll collaborate with, or it'll be introducing a new product or whatever it might be. But then every credit union is still really unique in the way that they engage with their members. They want to differentiate. So they do still try and compete with their USPs and being differentiated versus the others. And of course they want to have the both number of members or whatever it may be. And they are quite, as I say, quite unique. So some credit unions will only offer services to the armed forces, for example, and that's quite niche. So whilst you're collaborating, maybe operationally or through payroll or something like that, there's still that competitive side where they need to differentiate to target a specific member or an employer or a location, which is that's exciting too. It's nice about that. And I think the question you said earlier, Adam, I just wanted to say the thing that irritates me a little bit about the sector is they're not always able to be the masters of their own destiny. So where we build something for them, or they want to introduce some unique technology or a fintech or something, they're really hampered by when they're going to be able to actually integrate that, because they're not big enough, or they're not one of the bigger clients of their legacy providers. So they're not always prioritized. And that's the nature of the game, right? They're not prioritized to say, we're going to build that integration for you, or we're going to help you because you're our biggest, most valuable client. They're often left further down the priority trail. And then it takes months and months and if not years to integrate something, or it just never gets done because it falls away. And so for me, that's been a real challenge when trying to integrate or introduce something new and differentiated or something to do with proposition. It's impossible when you're working with these legacy technologies. And that's why I think also it's motivated them to come together sometimes to say, we all want to do this big thing. Are we a priority now? And still often they're not the priority. So I think this shared service offering is definitely also going to help take new features, new products, new marketing strategies, whatever it is, take it to market a lot quicker for them than what they're used to, which is exciting again.
There's no question that the sector's hard work, right? 360 credit unions. There's a lot of knocking on doors. There's a lot of kind of activity that you need in order to generate the scale as a big organisation to be able to have a meaningful impact, right? So what we see is technology vendors, especially those that want to come into the UK financial services sector, will start with a fantastic proposition for credit unions, and then as soon as they get a sniff of a building society or a tier 3 or a tier 2 bank, they're off, right? Because they've achieved, once they've got 2 or 3 credit unions, they can say, yep, we're in the UK, we've got a financial services product, we are established, who wants to do business with us? And then they're off. So you see lots of vendors coming and going. And that's really no good for kind of long-term sustainability and things like that. And you're right, like getting integrations with core banking platforms in the credit union space is really difficult. Getting certain vendors to publish their APIs so that we can start to build those meaningful microservices around a credit union's core is sometimes next to impossible. And that's either because the vendor doesn't want to share their APIs or because they don't exist. And I think it's probably the latter.
And that integration costs more than the entire new proposition or feature they've built anyway, which is devastating, isn't it?
And what is the membership base of these? You know, when you talked about 360 credit unions, that was I'd never realised there were those sorts of numbers.
2.4 million. You've got, you've got three very big credit unions in the UK that probably account for maybe 650 million of that, and then the rest's kind of split. If I look at Capital, where I'm a director, we're about 47 million on our balance sheet with 25 to 30,000 members. They're not huge. You have a society with 25,000 customers that'll have, probably a billion in assets, right? That's just the nature of the product.
I did read it. I couldn't help it. I would like to look up, go on ChatGPT and ask it to give you some interesting info. What I did find out, which I thought was it, the world's smallest credit union had only one member for a time. And at the time was still legally operated. Apparently a company called Laird Credit Union in Ontario. And it was formed, and this is interesting actually, just anecdotally, it was formed in the local area for the benefit of everybody in the area. And as people, either moved out of the area or, through natural sort of, people moving on generally, they ended up with one member. We were just wondering whether he had a big party or something at the end of it.
Canada and America are really interesting. They've got some really interesting operating models over there that we're trying to adopt. So when we talk about CU Share, it's a credit union service organisation, so a CUSO, and there are lots of CUSOs in America. They all offer different things. Some of them offer full kind of end-to-end banking platforms and back office services and support. Some offer a portion of the customer journey, but that operating model has allowed credit unions, irrespective of whether you've got 100 members or 500,000 members, to offer, a kind of really good customer journey that's comparable to what you would get at Bank of America or some of the big kind of regional banks that you see.
I think, Kerry, you mentioned about the Far East as well, where the connections that resonate for you as a business more so than perhaps the credit union area. Is that something else you'll find in applying these skill sets and trying to understand how you can leverage and allow other people to perhaps do new things in new domains? Is that also opening up other geographic areas for you too?
Yeah, so we've got a service called, it's an innovation as a service that we're also offering. It's where you can partner with different fintechs, but collectively. So you don't necessarily have to go on that journey on your own. And we find a lot of the Middle East is quite far behind in terms of how they've been able to access fintechs and that whole end-to-end innovation journey. So we're getting quite a few requests to help them with identifying appropriate partners and taking them through a fast-paced end-to-end innovation journey, which doesn't just look at features of the fintech, but also how do you integrate it into your business? How do you do it at appropriate cost? So we're not talking to credit unions in the Middle East. We don't know of any there, but it's that same shared service innovation offering, which is quite interesting there. Just back one step, which I think is quite something really unique to this sector, is their relationship with employers. And I've always said the most natural place for financial services is the workplace. It always has been for me. I've been a big advocate for workplace savings and debt debt management. So the credit union CEO and their relationships with significantly large employers is fantastic. So they have joint objectives. So, some credit unions will just focus on the nurses, or as I say, armed forces, or maybe travel, those that work for TfL, which enables them to really focus and collaborate with these significantly large employers on massive objectives for their employees and members, which just gives so much opportunity for further growth. So there's incredible growth opportunities in that sector because of their alignment with these big employers and financial difficulty and long-term resilience and retirement planning. And, the opportunity there, if we can take it and help them align their objectives with their core clients, there will then be no stopping. And as I say, each one is quite different. The challenges that nursing will have versus the TfL employees versus small businesses who are looking for little loans, they're all very different, which enables this differentiation. But really, the sector growth, because of the alignment with employers, is enormous. So I wanted to throw that in there, and I just think it's such a unique opportunity. Watch out, workplace propositions.
Yeah.
I'm
And
glad
it
you.
also,
Yeah. So sorry, just to add on to that. I'm glad you brought that up because I had it on my list as well. So there's a couple of things that credit unions are really good at that they've been doing for a long time that we're beginning to see more in the mainstream now, but new players are coming in and maybe doing it a little bit better. But is that kind of whole payroll deduction piece. So when we look at auto enrollment for pensions, we could all log into a flexible benefits portal. We could choose how much we want to contribute to our pension. That's kind of matched by the employer. So auto enrollment for savings might come because you save into your pension for retirement. You save into a savings account. It's a rainy day fund. But being able to connect to those flexible benefits providers so that somebody can save directly from the payroll into their credit union account would be a real game changer for credit unions. And that's something that we're working on.
it also feels there are some quite big topics out there that would certainly sit emotionally well, in terms of vulnerability and those sorts of things. Those businesses have proven time again, haven't they, historically, that is what they exist to deal with.
Yeah,
their membership and helping them with these things. So again, it feels like that fits well.
And the other thing is accepting that the world's a changing place. There's people working in the gig economy. There's people whose income isn't as regular as it would be when you're kind of full-time employed, and therefore financial products have to evolve to be able to meet that. So the other thing we're working on is looking at variable recurring payments through open banking. There's a bit of a disconnect around that we have the ability, through the kind of payment orchestration people in the UK, to take variable recurring payments from people's bank accounts. What banks, build size and credit unions and lenders, most of them don't have the ability to cope with a variable recurring payment because it changes every month. And loans are typically very structured. And the mainstream banks are probably not really that interested, because they have a credit risk profile, they have a repayment profile, and somebody gets paid monthly. So, and you know what? That's 90% of the population. So why would we cater for the other 10%? But credit unions fit that gap quite nicely. So we're looking at, we're building out the logic around variable recurring payments. We've looked at different software solutions to facilitate that. And we're also working with payments providers to look at how we actually implement it at scale. There's lots that not the odd one out's doing that, you would never think, but it's super exciting.
Yeah. And I'd say when you first said the name to me, I thought it took me a minute to think, but then actually it really, really resonates. Actually,
Yeah.
I think the situation around irregular income and the gig economy and all that side of things, I think is an issue across financial services. Full stop. It's not just a savings and banking and loans piece. All sorts of areas are massively constrained by inflexible products in that way, in that exact same way around, if even talking about pensions and all that can react to someone's income, but other protection products and so on are also in need of that flexibility and just don't have it.
Financial institutions across the board have to be easier to do business with, right? And because if I look at I'm one of the big banks in the UK, having just kind of switched my current account there, and it's great, like for 90% of what you need to do, but God forbid you actually need to phone them. Or,
yeah. There's no relationship anymore,
conversation with them. The financial institutions have to be easier to do business with, and that's not about just buying the next best technology out there. It's about engaging properly with the right people that know how to build a customer journey that's actually going to make sense.
Yeah.
That's us, by the way.
Excellent.
Absolutely.
So, just in terms of a roundup, question that we always ask is, what would your key learning be, or what would you tell your younger self if you had the opportunity?
What bit of advice would you impart on your younger self with all that knowledge you've accrued? I know it's a really hard one to put people on the spot with, but part of the reason to do it is just to see what we've done this for a long time. And it's really interesting. Quite a lot of common ones, actually. So that doesn't matter. I just think I'm buying you a few seconds to have a little think back. But yeah, well, yeah, if you could pick one or two out.
You know, it's funny, because Mark and I have gone through this change of building not the odd one out. You do reflect when you're doing something like that, because you're taking on risk, right? So I wish I had done it a long time ago. And so my message to myself would just be brave, be braver, be braver, be quicker, be braver, quicker. And that, and also I think maybe coming from consulting and helping other people build their propositions, know what you know, be confident about what you're saying, because actually not everyone has to like it, not everyone has to believe it.
Yeah.
But believe it yourself, and you're brave enough to say, no, that is the thing, I believe in that enough.
Yeah, no, listen, those are great. Be brave, be confident is a nice one for us to have on our list. Yeah. Mark?
So I'm a great believer that good people come together and do good things, right? And there's, I don't know if there's a higher power or whatever. I'm not a great believer in that, but good people do come together and do great things. My advice to my younger self would be just make your mistakes early, because you'll make most of them anyway, and you'll learn and grow as a result.
We're gonna at one point or another. I'm not sure what Sam's got planned, but I think we're gonna need to get a collage of these little snippets, because they are brilliant if you get enough time to think about it. Because like you say, and it's not always obvious, but
What were the messages to yourselves?
oh God, oh, mine was don't be so brave so quick, because actually taking the final salary would have been great. No, I'm joking. No, I'm joking. No, they're probably not dissimilar from what you've just said, but I probably led my life in a reasonably risky way in that context, which is not always good for the heart or the hair in my case, as you probably gathered. But yeah, no, I think I can't remember specifically ours. We will put a collage together and put it out, because we've had some really, really interesting ones. And sometimes those little snippets are the ones that just make you think, aren't they? About what you're doing. Listen, it's fascinating what you're doing, and I don't think we need to wish you well. I think if anyone's listening to this, and with the experience you guys have got, I mean, it's fantastic. They've got somewhere people they can contact to start, their journey. Ideally, collaboratively as well, because I think that's fabulous.
Yeah.
So,
thank you
so much for joining us. Really, really appreciate it.
No,
Thanks.
thank you for having us.
Yeah, thanks for having us on. It's been a great chat. It's always nice to chat.
Yeah, always nice to chat. I'm sure we'll do it again soon. But for now, Mark and Kerry, thanks so much for joining us.